Thank you everyone for joining for part 2 of Fixed Assets and Dynamics NAV 2018. Again, this is Danica Pelgrim with Intellis Solutions. Here you can find our website and my contact information. The best way to get in touch with me is via email. And on our website, like Stuart said, you can find other webinars, and this is the same place where you're going to find this webinar posted as well. This is a high-level overview of what today's agenda is going to be. Last week we talked a lot. We got in depth in a lot of the setup, and here we're just going to be doing some more of the other features that we couldn't fit into the half hour last month on that webinar, just to enhance your understanding of fixed assets, and maybe some of the users will be able to start using features that they haven't considered or thought of using. So the first topic we're going to be talking about is setting up multiple depreciation books. The reason why you would generally set up more than one depreciation book on a fixed asset is you would have one generally for what is considered your GAAP reporting, and the other one might be for like a federal or state calculation. Those other books would generally also be set up using a different depreciation method, and that would be an easy way for you to give reports to your auditors that they would use for your income taxes, state and federal, or whenever any other depreciation method that you would want. As with the depreciation book that you would use for your GAAP reporting, you would need to set up a depreciation book for the other calculation that you would want to do. So you would go to the same places you did when you set up, and we used what was called a company one. In this example, I'm setting up one for federal. One thing that you do want to be cautious about is the book that you're going to be using for your GAAP would be the one that you would integrate with your general ledger, and you would have all of those boxes checked that you see here on this screen. For any of the other ones, for the federal and state that you're simply going to be used for income tax or other financial reporting that you would give to outside auditors or accountants, you don't want to check these boxes, and you have to be very careful about that. If you do end up erroneously checking these boxes, you can run into an issue where you may be double booking any acquisitions and or depreciation, disposal expenses, or whatnot. So please make sure that any book that you ever put on a fixed asset, only one of those books has these boxes checked. You still will have to post entries to your fixed assets with these specific books. So on the depreciation book, you also need to identify journals where you want your entries to go to. And you do that in the same manner as you did on your other one, and I'll review that process again here. Once you have your book set up, what you would do is go to your fixed asset list and select the fixed asset that you want to add the second book to. And then on your Navigate tab, you can see that there is an option there to get your depreciation book list, and then you can just simply add the new depreciation book. And you can see here in this example, I added the federal, and I did this as a declining balance one, and I did we're going to do 50%. In this particular manner, the way this is going to depreciate is it's going to depreciate 50% of what the existing book value is for each year, and then you would put your depreciation starting date. I also put a link in the slide deck here, which Stuart will put on our website for you. I'm just going to select this real quick to show you what this link is for. This is the most recent help topic on depreciation methods. This is a real good resource to show you the standard depreciation options that are available in NAV, and it gives really good examples of what they are. If anyone is like me, it's been a very long time since I've taken accounting, and that little refresher is very helpful because it gives a lot of good examples of the different depreciation methods and how they work and the setup. Because as you can also see in this one, I put a depreciation percent here, the percent that I want to use, as opposed to a number of years, because it's not a straight line option. After you have your book set up, your new depreciation book set up on your asset, just like you add the acquisition cost for the GAAP book, you also want to book the acquisition cost for the second depreciation book that you put on there. In this example, I use the same original acquisition date as my GAAP depreciation book, you want to make sure you put in the new depreciation book, posting my acquisition cost, and then I'm going to use the same acquisition cost as the original, as the cost that I'm using for my GAAP that posts the general ledger. You do also want to be careful that you just use a regular fixed asset journal as opposed to a fixed asset GL journal. The fixed asset GL journal posts to the general ledger, and you do not want that to happen. You just simply want to go directly to your fixed asset and hit that fixed asset ledger only. Just like on your GAAP set of books that hits the general ledger, you still have to calculate depreciation on this one as well. And then when you're calculating the depreciation on this particular book, you want to make sure you select that book in this field right here and the respective period. I just want to note here, these entries will go again just to a fixed asset journal and will only hit the subledger and not the general ledger. And the system will know, because you don't have the integration set up on this book, that even if you accidentally have this box checked, it's not going to insert a balance account because nothing goes to the general ledger. So on that note, let's go into NAV and take a look at a couple of these things that we just talked about here. So I already have the depreciation book set up, but I'm just going to go in and show you real quick how we would do that. So you would just go ahead and hit new, add the new book, and I'm going to go ahead and edit my federal book. You can see I have all of these options. They are not checked. And then when I go under the navigation tab here, I can go to my fixed asset journal setup. That's where I'm going to find this. And this is where I would set up all the journals where I want my transactions to go. Specifically and most commonly, this is the journal where I'm going to find my depreciation entries when I do my calculation. So after I have all of my additional books set up, I don't think there's a limit to the books that you can set up here. I would go to my fixed asset, and here what I'm going to do is, as an example, I'm just going to show on this particular fixed asset, I'm going to go to the navigate, go to depreciation book, and you can see here where I already have my federal one added, and very similar to the example on the slide deck, I use the declining balance one, and I added a % here as opposed to years. And you don't need a fixed asset posting group here because it's not posting to the general ledger. After we've done that, like I mentioned from the slide deck, we do need to book acquisition costs. And as far as acquisition costs, I'm going to use this one as an example. So if I go into my ledger entries, let's just take a peek at these real quick. This original acquisition date was May 2018, and here was my acquisition cost. You can see I have a bunch of depreciation already here for this book. My company book, this is my GAAP book, and all of these entries, I have corresponding entries in the general ledger on this one. So to get the acquisition costs for my federal book on here, I'm going to go to actions and go to just the fixed asset journal, not the fixed asset GL journal. I already have this staged. I'm using the same posting date as the original acquisition cost for my GAAP set of depreciation book, and I want to make sure I'm picking my federal book, its acquisition cost, and that's the same acquisition cost as my GAAP book. So I'm going to just go ahead and post this one. And it's successfully posted. And then now if I go back to my ledger entries for my Supra, I can now see that I have an entry for my different book here. Just like now that you're using a second book, when you do your calculation of depreciation, you're going to want to do a round of depreciation for your GAAP books and then also for your federal books, and then you'll be able to see all of the different books that you have here. I also want to note that you don't necessarily have to run each one of these books, calculate the depreciation in the same increments. You might want to do your GAAP books or the company book, the one that posted the general ledger, every month, but maybe you do the federal one only once a year or quarterly. Each one of these books do not need to be done in the same increments. So I am going to just do this for July, and I'm actually going to pick the fixed asset that I just posted the the acquisition cost for, and then I'm just doing July. Let me just change my description to July as well. And regardless of what period you're choosing here, it already prorates it based on the date of the acquisition and the type of depreciation you selected here. Tells me that it created a journal here. Do I want to see this? And it's inserting a line into the journal. I'm just going to cancel this real quick because this is taking longer than expected. Let me see if I could just calculate that again real quick. Let me pick this one fixed asset that we were doing here. Do I want to open the journal? Yes, I want to open the journal, and here we go. It actually inputted in there twice, so I'm just going to delete these first lines here, and I am going to post that depreciation. And then if I go back and look at the entry, you can see now that I also have depreciation and did a catch-up entry from the date of 5/18 to July 31st, 2019. So the system knows how to do these calculations and prorate them accordingly based on the difference between these two different date ranges here. So now going forward, this amount would be much lower and calculate based on from the July 31st date, and you have both sets of books here. And then you can look at your book value report and also pull those for the different types of books. And then this is a very useful report that you would be able to use if we just want to preview this real quick and give this to your accountants for the federal book for tax purposes. Next thing we're going to talk about is tracking maintenance. This is something that I really don't see a whole lot of my clients use, but I could see where it'd be very useful if you wanted to actually keep track of all the expenses outside the acquisition costs of your assets. There's one or two little setup areas that you need to do before you start using the maintenance. The first one is if you want to keep track of the type of maintenance that you do in your assets. This is an optional area, but something that could render very useful if you just want to keep track of the different type of expenses. If you go to fixed asset setup area under maintenance, you can just add whatever codes are necessary for you. And then on your fixed asset posting groups, you do need to enter your maintenance expense accounts. This is the GL account that the maintenance expenses would go to for your respective types of equipment. Just to note, the maintenance expense account could be the same for each one of the fixed asset posting groups. They don't necessarily need to be different. Another area that might be useful and is not mandatory to track maintenance or the maintenance expenses is this maintenance registration. This is just kind of like a calendar of events of things that you might want to or need to do. So like in this example, it just shows the $3,000 mile service, and this is something that you can book all the way out into the future. Like, potential dates that you might want to do oil changes or change the tires or something like that, and just list the maintenance vendor. This doesn't necessarily automate anything, but if you put dates in here of potential dates where you might want to do service or keep track, there is on the list of reports for maintenance under reports and analysis for your fixed assets. I showed a very small example for the month of August of 2019. All of these fixed assets have some scheduled maintenance for that period. And this is a report that you can run once a month and just manage this. In order to have the maintenance cost be booked to a maintenance ledger entry for the fixed asset, there's a couple of fields that you would need to expose on your purchase invoice line. The first one is the fixed asset posting type. Generally, this will default to and is set to acquisition, because when you're buying a fixed asset, that is typically and has to be the first entry that is posted against your fixed asset. The only other option fixed asset posting type field is maintenance. So if you want to keep a log of the maintenance ledger entries against your fixed asset, you would pick your fixed asset that you're booking the expense for, indicate that it is the posting type of maintenance, and this is the optional maintenance code field that you would want to use if you want to keep track of the type of service and what you're paying for. And then, of course, whatever the expense is for that particular service that you're paying for. So let's go into NAV once again and look at some of these setup areas for maintenance. So for the maintenance codes, I'm just going to type in maintenance, and then you can see here I get, these are actually the reports. I'm going to go into the setup area and go to the maintenance, and here are those codes that I show you. And again, these are just optional. On the fixed asset posting groups, I'll just go in and show real quick where we can see that maintenance expense account here. If this field is not exposed, then you might just need to go into choose columns and make sure that that field is added over on the right-hand side here. And then if I go to my fixed asset list and I go to navigate, this is where I can add my future potential. This is like way out into the future. We'll just change this to 2019. The different type of services that I would want for that particular fixed asset. I'm just going to go ahead and copy this vendor number, and I'm going to go home here, and I'm going to go to this particular vendor, and he's already selected, and I'm going to add a purchase invoice for this vendor. And I'm going to do invoice number 7. I'm going to pick my fixed asset. And this is where I was saying you have to be really careful. It defaults to acquisition costs. You want to make sure that you select the maintenance costs here. And I'm going to buy a new set of tires for this, 4 tires at $250 a piece. And I think this is actually in Norwegian kroner is this particular one. So when we actually go and look at this, after I post this, now if I go back to my fixed asset list and go to my maintenance ledger entries, I'll see my new tires there. And it gives everything by the maintenance code. As you can see here, there is an entry that didn't post with that maintenance codes. It's just not mandatory. It's just for reporting purposes if you want to track that kind of information on your fixed assets. So, but it doesn't add anything to the book value here, the ledger entries. This option right here for your ledger entries will only show anything that's related to acquisition, depreciation, write-ups or write-downs here. And all your maintenance costs will be shown in this maintenance ledger entry here. I want to talk about canceling entries. I do get periodically, it's not unusual for me to get calls on how to correct entries that were erroneously posted on fixed assets. If you look at the ledger entry list on your fixed asset, you'll see that there's an option to cancel and reverse. I think this confuses a lot of people, and it confused me at first when I saw both of those options as well. If something was erroneously posted and you need to get rid of it in order to redo it for whatever reason, the best practice would be to cancel an entry. If you choose the cancel entry, what ends up happening is the entry that you select to cancel actually just falls off the ledger as if you never did it, but it does in fact reverse the effect of it in the general ledger as well. If you do choose reversing entry, what it'll do is it'll add another entry to your fixed asset ledger entry as well, and it'll just be the opposite sign here. The issue you would have there is if you wanted to, if this, like for instance, was done in error, this January entry, and I wanted to recalculate for a different period or a different amount or something, whenever you do a calculate to depreciation, it evaluates the last entries that it finds in here. So if you do a reversal, it'll actually put another one here for January 31st with the opposite signage. So it does consider those and looks at those dates in there, and you might not get the proper calculation or effect if you reverse it as opposed to cancel it. When you're canceling an entry, you will get an option when you hit that cancel option to either use the same posting date or you can use a different posting date. You do want to be cautious when you do that because you can select multiple entries to cancel at one time. If you select more than one, all of them will have the original date if you don't indicate a new posting date. If you do decide that you want to use a different posting date, every single entry will come into your journal with that new posting date. I used this screenshot. This is a fixed asset GL journal where it is showing the entry that I selected to cancel. The only piece of information that you need to add here, and I am canceling a depreciation entry, I do need to put the depreciation expense account in my balance account here. After I post that entry, you'll see that in the error ledger entry list here, and these are only the ones that have been canceled. If you do erroneously reverse an entry, those will not show up here. If you do accidentally use the reverse instead of cancel, you can go back and cancel an entry that was reversed. So let's go in and look at canceling. So I'm going to go back to my Toyota Supra option. Right now, I don't know if I have, there's no fixed asset error ledger entries here. So I'm going to go into this and this is my January depreciation right here. So if I were to want to maybe cancel both of these, I could do that. If I leave this posting date blank, when both of these come into my GL journal to post it, if I leave this blank, they'll have the original posting date. If I put a posting date in here, both of those entries will come in with the same date. I'm just going to go ahead and only do the one. It's telling me that they've been transferred to a journal. These I do want to affect the general ledger. So I will find that entry in my fixed asset GL journal, and I need to put in my depreciation expense account. And I'm doing a vehicle, and I'm going to post this. Hit OK. It's been successfully posted. And now if I go back to my fixed asset and go to navigate and go to the ledger entries, you don't even see the January entry here already. And then I can recalculate, and it will recalculate as of December 31st, 2018. And now here, if I go to my error ledger entries, I can see my original entry and the one that was canceled. So that is the best and easiest way in order to get rid of entries that were posted incorrectly. Another thing I do want to add about that is if your acquisition cost is wrong, you can't, if you have posted any depreciation after your acquisition cost, you must reverse all of the depreciation entries before it's going to allow you to cancel your acquisition cost. So let's talk about reclassification entries. What reclassification entries will help you with is, I have had a couple clients who might bundle a bunch of fixed assets together all into one. A good example of that is if you buy multiple laptops, like 5 laptops or workstations or common items all in one, and then you might want to just get rid of one of them or dispose of one of them. Or if you do a build out, this is another one that I've seen several times, where if you do a build out in a building, and either whether it's a whole floor or partial floor, you just lump all the costs, the carpeting, the drywall, restructuring the office, the cubicles, any artwork or whatever, all into one journal entry, and then you want to dispose of a portion of it. Well, you cannot do a partial disposal of a fixed asset. So the reclassification journal would be, the NAV help tells you to transfer, split up, or combine fixed assets. The most typical one is I want to split it up. So what you first do is, I'm not going to get into all the details of it because I showed how to set up a fixed asset in last month's webinar. You would set up a new fixed asset, which would represent the piece of the original one that you want to get rid of. So in this example, the reclassification journal, what it essentially does is, I'm going to, if I want to dispose of something on July 31st, 2019, I'm just going to take my original fixed asset number, which has, let's just say hypothetically, $10,000 for, a bunch of office equipment that I bought. And then I want to get rid of one desk. I created a new fixed asset, which has nothing on it. It's a core fixed asset. I want to transfer $1,100. That was the cost of one of the desks to this new fixed asset because I only want to dispose of this one desk. In my reclassification journal, I'm going to indicate that I want to reclassify the cost and the depreciation. So if there has been any depreciation that has been recorded on this fixed asset, it's going to calculate the portion of the depreciation that belongs to this $1,100. Once I hit reclassify on the reclassification journal, it sends an entry to my fixed asset GL journal to transfer everything in the general ledger. And this, the net effect of this is 0 in the general ledger, but this also works if you put a portion of an asset to, or a whole asset to, a wrong general ledger account. That's another good example of why you might want to do this. You set up a fixed asset that went to equipment, but maybe it should have been computer. You have a different balance sheet item. You can transfer 100% from one to the other, and it will reclassify all the balance sheet items to the correct balance sheet accounts. And then this posts, and then the reclassification is complete, and you've moved all the costs and the respective accumulated depreciation to your new asset. So let's go in and take a look at that. I have already set up a fixed asset here for one desk, and I have under my actions a fixed asset reclassification entry already staged where I'm taking out one desk from this asset to this asset, and the cost of that desk is $2,000. I want to reclassify the acquisition and the depreciation. So I'm going to reclassify this. And it says they were successfully reclassified, but actually what it did is it sent an entry to my fixed asset GL journal, and you can see it's taking the acquisition cost out of this asset and putting it on this one, and this is just about the only time you're going to be able to see a negative acquisition cost on something. And then it also calculated the respective depreciation to date as of July 31st. And then I can go ahead and post this. That was successfully posted. Now on my desk, I should have a book value on this asset, which I do. And then if you needed to dispose of this, you would do this disposal the same way you did it as I showed in last week's. I'm not going to get into that. You can refer back to last month's webinar on that one. So that's how you reclassify an asset. I'm going to touch on real quickly the couple different ways to sell an asset. Last week we just talked about disposing of an asset without any money exchange. Selling a fixed asset would mean some sort of a receipt of cash. So there's a couple different ways to do that. The example that I'm showing here is maybe you sell it to a customer or someone who's not necessarily a customer, just an outside buyer that you want to set up as a customer, and you want to actually create a sales invoice to send it to them. So just like any other sales invoice, I'm going to go in, enter my customer, but instead of maybe putting like a GL account or an item, I'm going to select my fixed asset, and I'm going to put the amount that I'm going to be selling the fixed asset for in my sales invoice. If you don't need to physically send out a sales document to bill a customer for it, the other way you can get rid of or dispose of an asset that you're exchanging for money is in a fixed asset GL journal. Here you would put the date that you're selling it, choose your fixed asset, pick your respective book. In this particular case, you want to make sure that it's a book that's your GAAP book or the one that's posting to the general ledger. You want to pick the fixed asset type of disposal. It's automatically going to pre-fill with sale. This is going to be a negative amount because you're reducing your fixed asset, but this is the amount, again, of your sale price. It has nothing to do with the value of your asset or the original acquisition cost. This is the amount of money that you're receiving. And you would use a fixed asset GL journal if you don't need a sales invoice or a document that you need to give to somebody in exchange. Someone just on our system comes in, gives you a check, and then here you would, in this particular instance, I'm going directly to my cash account because they're just giving me a check for this. So just real quick to show examples of that, I'm going to go home. I'm going to go to my customer list. And I'm just going to show you, since we're running short on time here, I'm going to pick any customer and create a sales invoice. Let me just go to my sales invoice list. That might be a little bit easier. And create a new one. And I'll do my Canon group. I will pick my fixed asset. If I'm selling that car that I was just using, one for whatever the sale price is, if I'm selling it for $50,000, and then post this invoice, and then it oh, we need to put some dimensions in here. I'm just going to bypass putting those in, but this is how you would do the disposal, and then by virtue of all of the information that you have on your posting group, it's going to know which gain or loss account that you need to put on there, and this works just like any other sales invoice. You would need to record the deposit upon receipt of the cash and relieve this the same way you would relieve any other sales invoice. So that's it for today. Just to go over a quick few quick helpful tips. If you want to have more than one depreciation book, make sure you only set up one that posts to the general ledger. On the maintenance, remember to add the GL account to the fixed asset posting group. Just remember that that maintenance code is not necessarily mandatory, it's just for reporting purposes. It is best practice not to reverse any erroneous fixed asset entries, but use your cancel instead. And remember to go into your fixed asset GL journal to post it. And remember, you can use your reclassification journal to partially dispose of any fixed assets that you have on your books. And that's all we have for today. Let me know if you have any questions, and please join us next month to learn more about our features for Microsoft Dynamics NAV 2018. Our topic has yet to be determined, but please join us because I'm sure it'll be something interesting. And here again is my contact information if you want to reach out to me directly. Okay, well, thanks everybody for joining, and look forward to seeing you next month.